She's on here. And then this will be emailed to everyone afterwards today, to the attendees, and then we'll also have it up on our YouTube. All right, I'll go ahead and share my screen. And that's the screen I want to share. Oh, no, I'm sorry, I don't want to share my screen. What a goofball.
Oh, what are you doing over there?
About 97 things, right?
Uh-huh.
All right, you can tell I'm a newbie here. Share. Multiple participants can share. All right, Avi, what do I do here, sweetie?
Christy, you're just going to begin sharing your screen, correct?
I need to make her a host, right?
Okay. So if that's the case, you should be able to.
Or
what you just said, accept multiple participants. Just go ahead and do so, and then she'll be able to share.
Okay.
accept multiple participants.
Christy, go ahead and give it a try.
You should give it a try.
I have to have it up in the background first.
Hi, Renee. Hi, Melissa. Welcome.
Hi, I love your background, Beth.
Thank you.
Hey,
Hi.
I'll change mine.
I guess I am dark. Okay.
Good to see you. I'll just give a quick little repeat. So welcome to our summer series, all things insurance. Christy's going to go ahead and share with us today all about insurance, and afterwards we are recording. It'll be sent out to you, and then eventually will be up on our YouTube channel. All right, take it away, my dear.
Great. Good afternoon, everyone. Thanks for joining. Wanted to go over today a little bit about insurance, how it affects the real estate professionals in the greater Sacramento area, especially. We work all over California, but today is mostly going to be about California or Sacramento area. That's where most of Women's Council is here. So a lot of Fireline questions. I know we get a lot, flood insurance in Sacramento, and a few earthquake questions. So I was going to just get into those a little bit. Kind of go over the policy, just so you guys have a basic understanding of insurance.
I'm good. I'm sorry, I got your text this morning.
Someone's on, there we go, thank you. And then we'll have some questions and answers afterwards. So this is kind of a general overview of how insurance might affect you guys and what tips and tricks we might have to help save some money and make the process go a little bit easier and fluid. So starting here, this is my team, some of my team. I have some new employees that I don't have pictures of yet. So that's me, and a lot of you know Yuri already. Yuri has run the referral program in our agency for Steve first. Steve Larson was a farmer's agent for 42 years in Sacramento. Most people know him. When he got ill, and I took the reins and took over his business. So Yuri's been working with him forever, and she kept on carrying the torch for me. So that's Yuri. Liz, a lot of you know as well, Liz Argento. She helps bring some cookies, and we haven't done office visits often, but we're ready to get back up once this COVID dies down a little bit more. We're just about going, and then we had that big surge. So Margaret in the middle is I've known her since we were 14, good friends, and she loves insurance. We didn't know she did till she started with me, and she just took off, got our licenses, and she is amazing. So I'm very happy to have her on our team. Erica on the bottom right, she handles our commercial department. So I just wanted to introduce my team a little bit. We have 4 Spanish speakers in the office right now. 2 are licensed, 2 are reception, so we can handle any Spanish speaking clients that need help as well. My agency, this is just a quick shot of what each of us do. This will be sent out as well, so I'm not going to go too far into this one, but these are my staff and my team, and they work wonders for our clients, existing and new. I am going to start. So I usually end with some tips and tricks, but I'm going to start with it. Insurance is not something everybody wants to hear, and it's not necessarily the funnest topic to anyone but me. So I love insurance, but I'm going to start with a few things. Just kind of jump in and go for some tips for you guys working with clients, looking for homes, selling homes, and your own homes as well. Fireline issue right now, but the main tip I have regarding the Fireline issue is get quotes early and often for your clients. Make sure your whole, including your clients, know what to expect regarding whether they're eligible for a home policy at all. I'd have to look for different companies that can accept certain risks. So do it early, give your insurance companies time to research for you. The longer they have to look up the address and what type of fire line it is, the longer we have to search for the best rate and coverage for your clients. So let your insurance partner know early. Don't wait to the last minute if you're looking in El Dorado Hills, that kind of thing. Give us as much time as you can possibly give us to make sure, because this can affect the closing of the home, the closing costs. So make sure the lender's involved, because I know you guys do a lot behind the scenes. So waiting to the last minute, we might come up with an insurance rate that is higher than anybody's seen for a while. So this is a couple of years old. A lot of people are used to it. You guys, I'm sure, have all seen it before. But a hint is give your insurance partner enough time to get you the best rate. We'll get it closed for you no matter what. But the longer we have with the address, and sometimes we have to talk to the fire department, see where the hydrant is. There's a lot of background that the insurance companies do when it comes to a high protection class for Fireline. Another tip is flood insurance. Flood insurance in Sacramento is excluded in California is excluded from all homeowners policies. The way I explain it, there's a higher risk for something to happen on your property. They're not going to include it automatically in your home policy. In Kansas, flood insurance is included in their home policy, but is tornado coverage? No, because they are more likely to have a tornado. It's a separate policy in Kansas. You come here to California, and Sacramento specifically, flood and earthquake are separate policies because we are more likely to have that happen here. So, they don't automatically cover it, they exclude it. And then the clients have an option of purchasing a separate flood, a separate earthquake policy. So it's excluded, and they're making a lot of changes to flood insurance right now. So just, give us as much time as you can as well. The rates are going up in Sacramento because actually some are going down. Starting October of last year, they're doing kind of a house by house. Instead of blanketing by zip code and zones, they're getting more technologically advanced. Fireline as well. They're going house to house instead of blanket panicking. Everybody's rates go up or just non-renewing people. Flood insurance, they're going more house to house or neighborhood by neighborhood instead of zip code. And that determines whether they're going to be required by your lender. Not even if you're not required by your lender, it does not mean you will not have a flood. That just means you are less of a risk to have a flood than those that are required to have flood insurance by the lender. So as real estate professionals, stay in your lane. Do not tell a client, you don't need flood insurance. It's not required. Be very careful. We have disclosures. We will get signed for you. We have them sign it. If we explain it correctly with our insurance license and my E&O insurance, which is similar to malpractice. If I misspeak, I have insurance for that. If you guys misspeak, be very careful what you advise to your clients. So if you send them to a reputable company, we go over things that are excluded from their policy and we get signatures if they decline. We don't put a heavy pressure on them. It's completely up to them, but we get those disclosures signed. And that protects the client, make sure they know from a professional what their risks are per their home that they're looking at, and then they can either accept or decline themselves. Many areas in Sacramento are still a high risk of flooding. We're called the River City for a reason. We're surrounded by rivers, we're surrounded by levees. How well do we trust man-made protection? It's wonderful. I don't know what we do about it, but just be wary advising clients because they have that option to purchase it, whether it's in a required zone or not. The required zone will be more expensive, but house to house, we can run it for them and see what their risk tolerance is for flood insurance, and they can sign away if they don't want it. Earthquake insurance. Earthquake is also excluded from a home policy in California. These earthquake policies are a little bit weird. They are more catastrophic. Their deductibles is not like your normal $1,000 deductible on your home, $1,500 deductible on your home. It's a percentage of the cost to rebuild the home. So if your home is, $400,000 to rebuild, you're going to have a 10, 15, 20% discount. So I've seen deductibles, $60,000 discounts or deductible, excuse me. So what this means is you pay the first, let's say $60,000, and then we rebuild the rest of your home if there's a catastrophic earthquake. The key to this is, and the premium is usually very low unless you're in San Francisco, LA areas, high risk of earthquake will be higher, but Sacramento, we've felt the tremors, but I haven't seen a house fall from an earthquake here. But people get worried when they see earthquakes in, let's say, Tahoe, places where we're not used to seeing it. So that makes people nervous. I've gone back and forth on my own policy. The premium is super low though. So what we sell is peace of mind. This is the most expensive investment in the most, your home is the most you will ever own. Most people will own. Protect it. Do it right. If you don't want it, you don't need it. But you just sign for it and we're good. But we make sure that they're aware. I think the key to having that high deductible is if there is a catastrophic earthquake in Sacramento, it's going to be easier for people to get a loan for $60,000 than $400,000 like their neighbors who don't have earthquake. So that is just up to each individual. It is required in certain areas. I think San Francisco and LA, I believe they require earthquake insurance, but I haven't had one that's required just because we're here, but I think some lenders do want that on there and require proof. Discounts. We usually lead with discounts. If we can save your clients money up front, we will. Then we can work with their budget. Once we've reduced their budget down, we can play with their insurance, make sure what they care about is covered properly. If we can get a discount just for being a teacher, automatically the rate's going to be lower, and then we can see what's important to them. Liability is a big, big risk right now in California, especially. We're a litigious state. So if we can get them a discount now, the higher deductible, we can make the, higher deductible gives you a bad day. Okay, you have a kitchen fire, you have to pay your $1,000 deductible. Having low liability can be a life ruiner. That's a big, big change. There is no limit to how much someone can be injured from a dog bite if a kid has a bite on their face. So we make sure they have enough money to protect for the big things just by first starting with discounts, and then we offer higher deductibles to get the premium as low as we can so they can be covered properly. Some discounts for insurance companies are, and this I'm basing it off our company, but a lot of companies match these. Packaging is one of our biggest discounts. If they have the home insurance and add their cars, that saves 25% off the home insurance and 15% off each car. We can always close the home for you guys at the higher rate, and then they will lower it down once we add any other type of business. Life insurance, earthquake, umbrella. Excuse me, still losing my voice. So set it up before close of escrow. That might lower their ratio at close because we can give you the lower amount if we're set up to bundle at close of escrow. Occupations, we have discounts for teachers, firefighters, realtors, dentists, and we have many, many, many more. Scientists is huge. That's 10 to 15% off the home insurance. You want to get their premium low? Start out by giving your insurance professional more information. Their date of birth helps. but occupations are huge. We'll keep going. My husband, for example, he works for the state. So if my employees out there said, Tim, what do you do for a living? He'll say, I'm a manager at the state of California. Stop. I train my employees to say, do you have any licenses or degrees? He has a degree in informational technology, IT, save 15% off of the home and each car. We're going to save them money, make it cheaper at close. We ask the right questions. So make sure it's not just, what's the address? What's the name? What's the birthday? Get someone who can really get in there and try and save them money so you can lower the closing costs at close of escrow. A little discount I throw out there just for you guys personally, over 55 years old, most insurance companies offer a 10% discount for 3 years called the Mature Driver Safety Discount. If it's an approved course through the DMV, it's about $15 is the cheapest I've seen. So that is, once we get the certificate, 3 years, you don't have to take it again, 10% off each car. It's awesome. Annual miles is important with people working from home through COVID. People don't drive as much as they used to. California used to blanket rates based on zip code. They can't do that anymore. It's discriminatory. So they changed it to actual risk on the road. I'm on the road all over the place. So I have, 15,000 to 20,000 probably is what I drive every year estimated. But most people, a lot of people working from home, people that don't, we're just not doing the things we used to. So check with your insurance company on your car and say, what am I rated for my miles per year? Lower it right now if you can. They're not looking, they don't care. The odometer, but now is a good time to save money on the car insurance too. Specifically for realtors, this is a big tip. Make sure if you take clients in your car, that your car is rated for business use. If you're just commuting to and from your office, nobody gets in your vehicle, you're fine. But business is always excluded from your car insurance. So if you're delivering pizzas, doing rideshare, salespeople like me, I'm rated business use. I go to clients' homes. I go out with you guys. I do your events. Business use, I'm using my car for business. It's a little bit more expensive, but if there's an accident and you have someone in your car that you're driving to show homes to, make sure it's covered. It's excluded business use. So that's a big tip. Pay attention to your policy. Be upfront with your insurance agent. They're on your team. We will always try and help you. If we make your car business use, we always try and find another discount to add to help mitigate that. So, we have to rate your business use. Let's add that real estate discount on there for you. You're driving clients, make sure you protect yourself. Okay. I was going to break down some home coverages and kind of quickly, let's see, 12:20, we're okay. So I was going to first show you kind of what a homeowner's insurance policy covers. This is where it gets a little dry. I get excited about it, but a standard homeowner's insurance policy, the dwelling coverage is the cost to rebuild the home from scratch. That covers the home, any attached structures, attached, not detached, and permanently installed fixtures. So your countertops, everything attached to the home, you pick up the home and shake it upside down. Everything that falls out is personal property. Everything that sticks to your home is going to go under the dwelling for reconstruction. Once we have the cost to replace the home for reconstruction, that gives us a number. We plug in the square footage, the year build, whether the house is custom, what kind of flooring is in there. That dwelling coverage number determines everything else. Everything else in this package policy is going to be a percentage of this dwelling coverage. So pretty much insurance says you have a house this big, this custom, costing this much to rebuild. You're going to have about this much separate structures, about this much personal property. So they give us a standard package, and then we play with it once we talk to the client. So if moving down here to the separate structure. So this will be a percentage of that dwelling that becomes for free. This is any detached structures, fences, barns, detached garages. I don't have any of that stuff, but a fence. So my standard package policy will automatically cover my fence. But there's people who have, 2-story garages with a kitchen, as long as it's not rented out. That's covered by separate structures. We just need to bump it up to match how much it would actually cost if it burned down. So we'll have more questions for those people. They might pay a little more, but their separate structures covered properly. They want that kitchen back. They want that bathroom back. Some people make, if you convert your garage into something fancy, we ask a lot of questions when it comes to separate structures. But most people are fine with that blanket, comes with the policy, free and standard. Coverage C is personal property. Again, you pick up your house and shake it. What falls out? Your stuff down to the last roll of toilet paper is covered under personal property. There are always limits to personal property. Everyone needs to know that. That's why we sit down and want to meet with the clients, not just go, here's the premium, here's the policy, go, and we never see them again. There's limits on jewelry. Computers right now is huge. People are working from home. We need to make sure if they're working from home, their business in their home is covered properly. Once it's business use, they allow for a little bit of computers that are used for business, but not a lot. So if you have your whole setup like I do in my house, I have it so if I need to work from home, I can. And that is excluded from the policy, except for a little bit of coverage. But if you have a lot there, talk to your insurance professional. Make sure you have that bumped up. Very inexpensive to bump up to. So just be aware. Guns, fine arts. The thing I tell my clients when we meet with them is when Steve was around and I worked for him forever, we would say, take pictures like Polaroids and keep them outside of your home. So if the home burns, you have those pictures. Nowadays, just do a quick recording of your home on your iPhone, whatever you have, email it to yourself. If there is a claim, you pull up that email and you can recreate your whole home in the cloud from your hotel room if your house burns down. One of the biggest complaints about claims is they forget what they had. They don't remember, what's on this desk back here, what's in that bookcase. They don't remember. So this just helps trigger that memory. It's not going to be required, but it is a very, just what I recommend. And then just email yourself and you are set. Sometimes emails, if it's old, kind of set something on the calendar every 2 years, maybe to update it. Sometimes the old emails get deleted, but for the most part, it works really, really well. Coverage D, loss of use. This gives money to help pay for temporary housing due to a covered peril. So if your kitchen burns, there's a house fire, your kitchen burns or smoke everywhere, it might be a hotel room for the night. It might be, if there's a whole house fire, it might be another home comparable to yours to stay in. You still owe your mortgage, whether your house is standing or not. So we would pay for the rent. You keep paying for the mortgage in case, just like you normally would. You keep paying your mortgage, we pay for that other house where you need to stay when we rebuild. Medical coverage is coverage E. This is a no-fault medical that comes on homeowners policies. If someone is accidentally injured on your property, regardless of fault, like usually it's 4th of July barbecue, someone drinks too much, gets a burn on their hand, we can say, hey, we'll just pay for that ambulance. We don't have to dip into your liability, because once you dip into your liability, what happens? There's no end. They can just say, oh no, this, and then keep adding stuff, and then, oh no, this. So we just say, hey, we'll just cover it. We're not admitting fault. We're just going to pay for it. So that is medical, and it's no fault. What is insurance all about? Yes, you guys want the home purchase to go smooth. Give us as much time as you can. We focus on consequences of liability as well. So that's, once you close is where insurance comes in and says, hey, yes, you got the home, you have insurance, but are you insured? Are you insured properly? So we talk to them, what's important to you? Are you worried about your assets if someone sues you? Do you have enough? We use insurance like a shield. You tell us how much of a shield you need and how much of a shield you can afford. Because you never know if there's a big accident, a big lawsuit, dog bites. If you have a pool, a landlord, if you're a landlord renting, or a dog, those are my triggers that you need more liability. For a rental property, you don't know what those tenants are doing. I was a landlord before. I said no pets. They asked me to do something in their home. I walk in the door and there's a giant poodle standing in the yard. If that dog bites a child or anyone, they would be named, and so would I. So as a landlord, we recommend higher liability, and we go through this with our clients. So we definitely ask, what's important to you? What do you have? What do you need to cover? Pools, you just never know what's going to happen in pools. And dogs. I love dogs. I love everything about them, but they are animals, and protect yourself if you have a dog in your suit. You will be liable for it. Cool thing about liability is it extends to anywhere in the world. We had someone in a walkathon that, walking away with her coffee, she didn't see the curb, fell off and hit a woman and broke her hip on a walkathon. That goes under your personal liability on your home insurance. So we did cover that. It can't be intentional, so no bar fights, but that's what liability is for. If my kid is riding his bike and hits a car, that's under my personal liability. He's my family member that did something wrong. So as long as it wasn't on purpose, it's covered. So depending on the severity of any injury, you could be liable for a percentage of your income until you're of retirement age. So they can take your investments, anything. So liability, very important. And I wanted to mention this because it's easy to try and cut back on some insurance to save money for closing. Just make sure they put it back up again, and you don't want to be the one to tell them you don't need that, or, maybe not that much, and that's okay to talk to them. But, cutting back liability is highly not recommended. We recommend minimum 500,000, and there's other more they can get if they have a lot of assets to protect. We don't choose how severe an accident will be. So insurance is about asset protection. Okay, there are exclusions to insurance policies. So normal wear and tear is not going to be covered by an insurance policy. Insurance is for sudden and accidental, something that happens in the home: fires, theft, vandalism, malicious mischief. Intentional acts will never be covered. You can't burn your house down and expect us to cover the home. Pollution's not covered. War, nuclear hazards, flood is not covered. Sewer and drain backup is not covered. And earth movements, so earthquake is not covered. You can reduce your risk by obtaining the flood and earthquake insurance, adding the endorsements. There's some endorsements that are out there. And getting that would just help mitigate a loss. If you can kind of see, is that toilet ring? We see that all the time. It leaks. We don't cover slow leaks. No insurance company will cover it. There are home warranty plans you can get that cover more wear and tear, like the big refrigerators, the freezers in the garage, heating and air for wear and tear. But insurance is just something has to happen to it. Storm damage, fire, big unexpected events. If your roof is just getting old, please replace your roof. We did that, there'd be no insurance. No one would be able to afford it. So old roofs we need to just redo. But if you have a roof and the windstorm blows off the roof, that is a covered loss. So sudden and accidental. Coverage is capped at the limits purchased. There's no such thing as full coverage. There's no guaranteed replacement cost in California. We have what's called extended replacement cost. That's an endorsement we add. So you take that cost to rebuild your home. It gives a cushion of 25% on top of that in case we need it. Not everyone remembers to tell us when they get a new floor. But if they go from an old tile to a new tile and doesn't upgrade, we'll give them new tile anyway. But if they go from an old tile to, let's say, a custom laminate floor that's worth it, it gets very, very expensive. That's when you want to let your insurance company know. If you add on a room or something, it's the upgrades that we really need to know about, because we're going to give you new, pretty much exactly what you had put right back on. Another question I get often is, what if I want a better floor than I had? What if I had linoleum and I want a nice laminate floor? You can get the cost of the linoleum from your insurance company as if it's brand new, and then you can pay the difference for what you actually want when you're putting your house back together, if there's a claim. Okay. Personal property. Be very careful at close of escrow. If you see kind of a premium that's really low, like stupid low, they probably put actual cash value on the policy. Maybe not, I hope not, but actual cash value gives you depreciated coverage, garage sale price, used price. You only do replacement cost unless we get a bunch of signatures from the client. If that's what they want, we'll do it. But most people do not want depreciated value when it comes to their home if there's a major loss. Actual cash value, let's say the cost of the roof is $15,000. This is a little older slide here, so it's probably more than that. The actual cash value would give you the depreciation. So if it's 11 years depreciated, that's 11-year-old roof, they only give the client $54.95, $5,000. Then their deductible, so the claim amount paid would be $7,500. So the cost of the new roof minus depreciation, less their deductible. So out of pocket would be almost $7,500. If they have a replacement cost policy, cost of the new roof is $15,000, depreciation is $0. Just to minus the deductible down, we pay $13,000, just the new roof minus deductible. Out of pocket's just the deductible of $2,000. So that is something when we're comparing, like if someone said, why is their rate much lower than yours? I go, all right, send me your deck page and I'll look, there it is. 50% of the time it is actual cash value, and that's very, very dangerous. I get this question at least once a week: market value versus replacement cost. We cover, your insurance company covers the cost to rebuild the home in the event of a total loss, including demolition and permits to rebuild. The market value goes, as we see right now, yay, it's really, really high. Do you want your insurance premium to match it? You do not. We're not going to go. What's going all over the place right now is land value in Sacramento, in California, is skyrocketing. We are still just going to rebuild your home. So let's say you take your house right now in Sacramento, put that house, pick it up, lift it up, and move it to San Francisco. Let's say it costs $400,000 to rebuild. Your house might be worth $600,000 right now. If you put that same house in San Francisco, it's going to be worth $1.5 million. So we will still only cover it for $400,000 because we're going to hammer away and pay the construction guys to rebuild it. So market value, we do not follow. I love it. I love to hear that people are getting equity in their homes, but your insurance company should be pretty static. About every other year, it'll slowly go up just because costs go up, inflation, but that's all we track. So as long as we have the base information correct on your policy, it might slowly go up a little bit every year, every other year, but it's not going to go, hey, I just got $200,000 in equity, let's bump up to $200,000. You don't want to do that. So once I explain that, people really understand what they're paying for and why we're not going to do that. They would pay more for it too. But once we explain, we don't cover the value of it. We cover the actual cost to rebuild. It really helps people. Okay, liability. There is, I already went into liability a bit. There is a policy, there's a endorsement called personal injury that we add on to our policies that covers slander and defamation. These are things that aren't normally covered in a home insurance policy, but with Facebook out there, social media, it's very inexpensive. There's something called libel, written, and slander, which is oral. If you type, I got, I don't want to name a restaurant, but let's say I said, I got E. coli. You think that business is gonna lose some business? I think so. Just me posting it on social media. People are gonna see it. It's gonna get everywhere. Panic. I will be sued, and that would be covered in liability if I have that endorsement. So I always add that to our policies. Fireline Changes. I kind of saved this to last because it's a little more dry than the rest of it. Fireline, I know it's been a huge change in the industry. My company was one of the first to step up to not non-renew people without having an option ready. We did have to non-renew people. Some people non-renewed and went bye. We were able to not let any of them go, and we helped them roll into another policy. So the bigger companies were pretty ready for this. The California Fair Plan stepped up to the plate on this. Thank God. When I first started insurance with Steve, they were the worst. They had the worst customer service. No one picked up the phone. It was for pretty much no one else could cover them. So we just kind of throw it at the Fair Plan. Fair Plan used to be the roof's caving in. They need something. So put them with a Fair Plan. Now they have made their technology increase. Their service is so much better. They now have policies that were able to quickly be created to accept this panic in the industry. With all these fires, we couldn't just let our clients, fend for themselves. They found something that helped. So what insurance does is have a wraparound policy and then a fire policy. So the California Fair Plan handles the fire risk of insuring a home. The insurance company does a wrap, so that covers everything else but fire. So it's going to cover the liability portion of it, theft, vandalism, so anything but. So that wrap policy is pretty inexpensive. But I've seen California Fair Plan get high based on area. They are getting smarter, however. So they are now going, instead of blanket, oh my God, Paradise zip code, oh my God, this zip code, and where there's concrete jungles in there that unless you have a Paradise fire, that was terrible, but most don't get into our concrete jungles. They're just not going to tear us down like that. It's going to be the more brush areas that get affected. So what they have done, and this is in the industry, they look at the house by house now. So flood has changed to this now, and so has the fire line issue. They now go house to house. Are you on a slope? How far away are you from a fire access or fire department? And they give us a brush fire rating score. And house to house. So they'll say, hey, this house is right by a fire hydrant. If something happens, they can just go and hose the house down. Where before it was just like, you're all gone. There's, find something else fast. Here, they're trying to lower the rates for people that are not necessarily in the higher risk areas. So they're going to charge it case by case now, which I appreciate, rather than just panicking and increasing all the rates. So we've even seen ones that we had to write through Fair Plan now eligible because they are doing house by house. They might now be eligible for a normal insurance policy. So we've been looking kind of on the renewals. We kind of check, hey, can this go with Farmers now? Can this go with another carrier that we write through now if Farmers can't? And we definitely do the comparisons with them. Try and get them out of the Fair Plan just because it's so expensive. And their coverage is not like our coverage. It's definitely a broker and a program. So, I want them back home, back in a cheaper, better policy as soon as we can. So they look at the fuel, make sure, if you're on a grassy hill with a bunch of trees, that's very high risk. The winds and, it just blows the fire right into these home areas. So they look at all access, they look at the slope, and they look at the fuels, how intensely an area might burn. So I am glad that they're going case to case now instead of just panic, non-renewing everybody or forcing everybody into the Fair Plan. The Fair Plan plus companion policies. So they're going to have two policies if they have to go to the Fair Plan. Fair Plan won't do the rest of it. the insurance company has to do the rest of it. So for clients that are in a high fire line, the FAIR Plan stepped up and we write the companion or wrap policy. So it's a reduction of premium because we're no longer going to cover fire, lightning, or explosion. That's all on the FAIR Plan now. They took that risk from us so that we can hold on to the client and still protect them and work with them and get them the best rate that we can. So the base policy will still have liability, water damage, theft coverage on the base. And it'll be a cheaper policy than a regular home insurance because we're not covering fire. Then the FAIR Plan picks up fire, lightning, and explosion. So together, these two policies make up a normal home policy that we're used to. So it has, our normal policies have everything. This one, they just need a main policy and then a FAIR Plan on top. It's going to cost them more. That's why I say get them a quote early so they know what to expect. Your lenders know what to expect. And if they just can't do it or don't want to do it, you guys want to know early an idea of how much it's going to cost so that they're just advised more and you don't spend a lot of time on a house that they can't do or don't want to get. So there's also a spray that they're coming up with. So I just got my own letter on my own home in Natomas, so I'm not even in a fire area. But insurance companies are coming up with ways to send like a team out. If a fire is coming towards you, they actually have this stuff that they spray on the house for free. It comes free, and it coats it in a fire resistant foam. So they're starting to, try to mitigate risk with you guys and just kind of make things a little better until we settle into hopefully some change. Hopefully we get out of the drought, but I don't see this going away. We just need to make it fair and try and lower the cost down as much as we can. Get more government support from California too, because it just keeps happening. Knock on wood, pray, but it's not. There's a lot of changes we've had in the industry because of this. So it is real and it's happening. But our job is to find the cheapest rate with the best coverage for clients so we keep moving and going forward with it. The FAIR Plan requirements. So again, they are a program. They're getting very picky. They need full front pictures of the home, including the address numbers. That's new. They require 40% down for a new policy, which means the client needs to pay early to start up a FAIR Plan policy. So again, give us time to get this ready so the client can prepare that. That's 40% down on a policy that is higher than they're used to, that's for sure. Usually they're around 2,000 to 4,000 a year, but I've seen some up to 9,000. And I know of people that have done 12,000. Just depends on the house and how sloped it is, how much of a risk it truly is. We might have to do work in the background too. So please give your insurance company time to research. We sometimes have to prove to them that there's a fire hydrant within 1,000 feet. That helps reduce the rate. There's a community program out there called Firewise, where communities can get together to try and get a discount off of the FAIR Plan policy, where the whole neighborhood clears the brush, removes needles from roofs, and they all sign this pretty much neighborhood pact that they will keep up with this work to get them a lower rate for the whole neighborhood. It's called a Firewise program. So all California FAIR Plan rates are the same. So make sure you go with an insurance company that knows what they're doing. You have to add in stuff like Farmers Policy comes with a package that comes with most of the stuff that we need for a policy that people expect us to have if there's a loss. FAIR Plan is stripped down base, and we have to add debris removal. We have to add fair rental if it's a rental property. They won't have other structures, so the fences won't be covered automatically. The detached garages won't be added automatically. So make sure that your client's properly covered. Yes, that is officially on the insurance company, but when you guys make decisions as to who you refer to, make sure they know what they're doing and have done a FAIR Plan policy before. It's a little different than we're used to. They might be newer, just not experienced in the area, and that's okay, but you can kind of tell who's been in the business a while and has been through this before. So things to think about. Have your clients review their assets and policies with a licensed insurance provider. I have errors and omission insurance for my advice. Do you? I don't have a real estate license or insurance. You guys don't have insurance license, so make sure you leave it. You can gently say, it's not, flood insurance is not required, but I advise you to take a look at it and talk to your insurance provider. Then it's up to the insurance person. And if there is a flood, they're not going to be looking at you now. They're going to be looking at us. You want them to look at us, not you. So find someone that will protect you and advise your clients properly. So just understand your coverage and your policy limits. Do they have the right coverage? Are there any gaps like jewelry, business coverage for their home office is important right now. Actual cash value or replacement costs on personal property is important. You have the liability that you need and mortgage protection. I know a lot of people, it's hard to talk about life insurance, but if something happens to one of the breadwinners, what happens to the house at that time? If the worst happens to one of the partners, can they still afford that mortgage? We talked to them about that as well. In closing, have an agent that you trust and that you like. Just like going to the dentist, my dad was a dentist. Everybody hated going to the dentist. But if you make it fun, put people at ease, you have to get your teeth done. You just do. Your teeth will rot out. You'll get infections. You have to do it. You have to get home insurance, but make it fun. Take care of what's needed, but we give them a pleasant experience. So use us. Make sure you like us. Make sure you like who you're working with and you trust what they do with your clients. It is important, whoever you refer to. Okay, any questions, you guys? We have like about 9 minutes.
Hi, Christy. It's Renee Roque here. Thank you.
Hello.
How are you? Thank you for your presentation. Do appreciate that.
Sure.
Lots of information. Insurance always scares me. Like, how do I know I have enough
Weird.
coverage? What is that liability thing? What does that mean? So
Mhm.
it always scares me. I have a question regarding the cash value. And if you can please explain that again when we're comparing or helping our clients compare one policy to another. They say, oh, I got this high quote. Can you explain that? I sort of missed it. I'm sorry.
Okay. So cash value, like market value versus reconstruction?
Well, I think, and maybe I misunderstood you. I thought I heard you say that sometimes they'll get one quote from one office and then you'll say, but they were using the cash value instead of
Actual cash value. Okay. So
Okay, thank you.
actual cash value is cheap because they're not giving much coverage. So if, let's say my house burned and I have replacement costs, which most of our policies have, people expect, if my house burned, I want new clothes, please. Don't give me depreciated value on it. Don't make me go to a garage sale with the little money that you gave 40% of the value of my shirts and shoes. I want my insurance company to rebuild my life how it was before my fire. You see a really low premium, like a stupid low premium, and like, what the heck are they doing? If you get a kind of comparison.
So exactly, what are you going to give me for that? Because I've been paying you month for 5 years, and I didn't get any return. So when something does happen to me, I do want you to restore me. So
yes, we sell peace of mind that if the worst happens, you will be covered the way you think you will be and the way you should be. There are some, especially like the 800 numbers, I've seen a lot, the companies that don't have an agent, you get different people all the time. I've seen them cover actual cash value on renters policies all the time. Yes, they have coverage, but they are not insured properly. They're going to get 40% of the value of their clothes back. Yeah, it's something, but will I have all my work outfits? Will I have my, this shirt's maybe 4 years old. They're going to give me 40% of the shirt value. When I go to rebuy my clothes and get myself back where I was, I'll be frustrated. I want new shoes, please. If I lose it all in a fire, give me new shoes. Give me a new dining room table. Don't give me 40% of the value. So their premiums will be lower because they're not covering much. So yes, if you want to strip down the policy, we can do that too. But we will get signatures all over the place if people change it like that. But they can. If someone's like, I don't care about my stuff. If my house, explodes, something happens, just give me 40%. I'll go to Goodwill and replenish my shoes and clothes and furniture. So
Thank
some
you.
people, I have had that happen. It's rare, but most people say, I want to buy my new clothes, get my furniture back, what I had. So we're going to go like in kind. So dining room table that's older, we'll get you a new one that's just like it, brand new though. With the actual cash value, they're going to say, okay, this furniture is 10 years old. Here's half the value of it. They're just going to write out a check and then they can go buy their own stuff. So yes, the premium will be really low, but the coverage won't be there.
Thank
Can
you.
I answer your question?
Yes, I do. I appreciate that. So can you just help me with one final question? I don't want to take up everyone's time. One final question. If we're as real estate professionals going to help the clients, is there one thing that we should say, you should always ask this?
So the client, when they go to get their insurance quote?
Yes, because most of them are just fast. They're just trying to get their lender something so the lender doesn't tap on that expensive insurance. But one question, make sure you ask, if you're trying to get a quote from someone, what is one question to ask about coverage?
For a quote, we just need their name, date of birth, and address. We can get it for them. So they don't need to, but what we say is sit down with your insurance person so you are educated and know what you're buying. You won't have anything that's more value than this home you are buying, especially first-time home buyers. Know what you're covered for. Talk to them. A lot of times people refer to us, we close it, and then we never hear back from the clients. It's like, we need to make sure you have jewelry. Do you have dogs in the house? We need to make sure that they are covered. So I would suggest that they meet with their agent, either by phone, and just do an overview checklist of discounts, big time. Always tell them to ask for discounts. They might have a new employee that doesn't know to ask about degrees and occupations. That's a struggle for me. I have to, ingrain that in. This is how we say we keep people. This is how we bundle everything. We save them money up front. So probably ask for discount, and you already know who you're referring to. So you already have a trusted person or people. So just, recommend to them to always ask for discounts. Say, what discounts do you have, and see if they can fit anything in there. Like my husband, state worker, we didn't think there'd be any discount. And then I go find his degree and it's right there, and we'll never leave because we save so much money right up front. Then we could pay attention to the big stuff, liability, making sure the house is properly insured and everything. So meet with your advisor and ask for discounts. Blatantly ask them. If someone comes to me, what discounts can you give me, Christy? Hey, let me get the list. And then we'll go through, can I get on this? Do you have a central burglar alarm? We try to save them money so that we can earn their business, earn their trust, and protect what they're truly needing to have protected. Any other questions? Okay, and I think this will be, it was recorded, so I think it'll be distributed. So if anybody needs to look at anything back or have any questions once you see it again, just shoot me an email, give me a call. Staff's happy to help too, or ask directly for me is good too.
Excellent. Christy, thank you. Over here in the chat, Melissa Moya, you did a wonderful job. Thank you. Tanya says, thank you, Christy. Natalia says, thank you so much. This was fantastic. Avi says, thank you as well. So this was very informative, thorough, in my opinion, because I learned some new things that I was not aware of. So thank you so much for being our first speaker in our summer series.
Yay, it was fun. Thank you for having me and inviting me. I appreciate it.
Absolutely. Everyone, this will be emailed to you as soon as it processes, because that is above my pay grade. Thank God for Avi. And thank you everyone for being here. In and out within the hour. Woohoo. Hopefully we'll see you next month. That'll be coming out shortly.
Great.
Have a great day.
Thank you,
Thank you,
Christy.
guys.
Good stuff, you all.
Great.
Thank you. Have a
job.
great day. Appreciate your time.
Bye,
Thank you.
Renee.
Welcome. See you
Bye.
guys.
Bye,
Thank
ladies.
you, Sarah,
Bye.
Tiffany, Celia.
See you in Chicago. Who's coming to Chicago?
Ooh.
That's Savannah, not me.
Where's Savannah?
She is actually on another Zoom.
Oh, that's right.
Can't
Okay.
splice her atoms anymore.
All right. Well, bye-bye.
Bye,
Have a good one.
thanks.
Take care. I love your background.
Thank you.
Bye.